All right, let's get started here. Again, my name is John Gemini. I'm a Regional Vice President of Sales here at Angel Oak Mortgage Solutions. Just to give you a little history on Angel Oak Mortgage Solutions is the largest non-QM lender, wholesale lender in the United States. We're in about 45 states. We've been doing this for, it'll be 8 years this month. So happy anniversary to us. And sorry. And we want to bring this, Eric, I'm going to turn it over to you. Why are we going to be presenting as a wholesale non-QM lender to realtors?
Really, to begin with the end in mind, John, is to let you real estate agents understand that these programs and how aggressive they are even exist. And we're hoping within a half an hour, this time spent is going to help you move a lot more luxury or any kind of real estate to an underserved clientele out there that did not know that these programs existed.
Great, Eric. Yeah, and let's roll into it. So again, Eric, why we're here. We're going to tell you some of the deals you're probably losing today, and maybe don't even know it. So we're going to jump into it. And what does it mean to you? Why does it matter? Well, just by knowing these type of borrowers, maybe you can close an extra 3 deals a year. And what does that mean to you? So let's jump into this. And who are these type of borrowers, right? We have self-employed borrowers. How many of you, we'll get into that. I'm maybe jumping ahead here, but hey, they can't qualify because of the tax returns. Maybe there's a jumbo borrower out there that you would all love to have, right? But maybe they don't fit that jumbo bucket. Or maybe it's a borrower that has had credit issues, and who knows what's happened since this pandemic. So I think we're going to show you a couple programs that you might be able to capture that borrower, get them back in that real estate game. And then an asset qualification program. We're going to teach you a little bit more about this program and why you should at least have it in your toolbox to show more homes. And then, we know investors are jumping into this market. We're going to show you a really, really powerful program that maybe you can take to that investor or investors that you have that can increase their portfolio, because a lot of people are out there wanting to do that. So just a kind of an overview of the borrowers we see and kind of give you the magnitude of those borrowers. 36% of the homes are rentals out there. So again, just the last program I mentioned is that investor. We can help you satisfy that borrower. 10 to 11 million of individual investors are managing an average of 2 or more properties. Then let's talk about the self-employed market. 36% of the workers today are self-employed. 59 million people. That's bigger than VA borrowers. 17 million categorized as self-employed. And I'll throw another statistic out there. In 2020, new business applications rose 24% over 2019. 24%, that's the largest increase in over 10 years, and I don't see that slowing down. So we're going to teach you how to get more of these self-employed borrowers. And then you have that adverse credit event. Those borrowers that may have gotten dinged up during the pandemic or after the pandemic. So we're going to teach you how to get those borrowers. A couple of questions have already come in. Yes, this is being recorded, and we will get this out to you before end of day today. So bear with us. I think you're going to learn a lot today. So look forward. So here's a scenario, right? Are you losing out on closing deals because your self-employed borrowers don't show enough income? And these are actually deals we have closed on behalf of loan officers. Self-employed borrower makes $200,000 per year and has a credit score of 758. He writes off 75% of his income, right? Great CPA. Now he's left with $50,000 trying to qualify for a jumbo loan, and he doesn't. I mean, I'm sure everyone out there has heard this. Guess what we can do? We can use their bank statements to qualify them and approve the borrower, gets the keys to their house, and moves into that jumbo home. Eric, you mentioned it the other day about, don't get them into that intermediate home, get them into that home of their dreams. So we're going to teach you how you can find those borrowers and give you some highlights on those programs. But these are scenarios, these are real life scenarios that we have closed. Are you losing out on closing deals because borrowers have had a recent credit event? So we've got a deal here. And again, I know questions are coming in, so please keep them coming. This is going to be as interactive as you want it to be. Last week we closed.
John, let me just point out that my team and I have done over $1 billion in bank statement loans. And we're not officially tracking it. I look at borrowers that are going full doc, that are self-employed, going with a full doc loan, versus if they were to go bank statement, they could buy up to 4 times more home, meaning, let's say self-employed borrower, full doc, qualifies for a $500,000 loan. If they were to go bank statement, now they qualify for a $2 million loan.
Yeah. And that's powerful, Eric, right? I mean, everyone in this business works on that commission structure, right? So why not get that borrower in that dream luxury home? So yeah, our borrower full doc didn't our full doc program, we enabled this family with this credit issue of foreclosure greater than 2 years ago, move into their dream home. So those are scenarios, those are real life scenarios you're all losing out on. Self-employed, I'm sorry, I gotta move my screen around here, sorry. Are you losing out on closing deals? Did I go the wrong way here? Sorry, we did that one. Sorry, guys. Okay, are you losing out on closing deals because your buyers are investors? An investor is looking to purchase her 19th investment home. Prior to funding was very costly because it was hard money, right? So they can't go conventional, so they have to go hard money with high rates, high fees. She was unable to qualify for a traditional mortgage using her tax returns. After the rental analysis was completed, she was able to qualify using our investor cash flow program. And again, we're going to show you some highlights of that program. The investor was able to purchase her 19th home. Okay, are you losing out on closing deals because buyers can't qualify? The buyer recently sold their multi-bits. I think I might have got right into the program, so I apologize. I'm going to back up here, guys, and I apologize. Operator error. And I didn't even introduce our panelists, so I apologize for that. Stacy, take us through this bank statement borrower, please, and give us some highlights of our bank statement program.
Sure. Thanks, you guys, for taking your time to come and listen to our webinar. Like Eric said, we definitely want to get you guys more involved in knowing that these programs are out there. So please get with your mortgage broker that you use, reach out to us so we can get you in touch with a mortgage broker if you don't have one that you already work with, and we can definitely help put some more money in your pocket by showing you these portfolio loans and helping these borrowers get into loans that maybe you didn't know that they had the ability to do. So basically the bank statement program, just to kind of give you a synopsis of it, we're not going to look at their tax returns. So self-employed borrowers, 1099 borrowers, if they have a good CPA, they're going to write everything off. So they might only show a very minimal amount on their tax returns. But what we do is we'll use the deposits going into their bank statements as their income. So whether we use personal bank statements or business bank statements, wherever they deposit their money into, that's fine. We're going to take an average of their 12 or 24 months of bank statements, look at the deposits going into it, apply an expense factor, and that's what we're going to use for their income. So like Eric said, you may have increased their buying power 4, 5, 7 times % of what you were able to get them into a house for using their tax returns after all their write-offs. So this is a great borrower. Typically the average credit score I think is a 736 for this type borrower. They have money to put down. They're totally ecstatic about getting into a home, not showing Uncle Sam all their income, but still being able to qualify for their jumbo or multi-million-dollar home. We go up to 3 million loan amounts on this program. And again, what we're doing is even before you take your borrower out on the road to look for a home, we're going to calculate that income for you. So you're not going in blind, not knowing what size home or what purchase price to be shopping these borrowers. This is a convenience for you guys. So what you would do is get your borrower, again, in touch with your local mortgage broker that you're accustomed to using. Or again, if you're not using anybody in particular, reach out to us. We'll put you in contact with somebody that does a lot of these loans with us, a professional expert. What they'll do is they'll collect the bank statements from the borrower for, again, 12 or 24 months worth of bank statements. They're going to send them to us, the account executive at Angel Oak. We're going to run them through our portal. We're going to get the income calculated for you, and then in turn be able to tell you, okay, here's what they can start shopping for. And again, increasing their buying power, increasing your bottom line, increasing the money in your pocket. It's a win-win. And these borrowers, they don't balk at the rates. They are going to be slightly higher than conventional rates because obviously it's portfolio lending. So it is going to be a little bit higher. They're doing alternative income calculations, not astronomical. I mean, they're phenomenal rates, but again, they don't balk at the rate because when you sell it to them like, hey, you can show Uncle Sam all the money that you make and give him 30%, or you can take this loan at a 4 or 5% interest rate. It's a no-brainer for them. So the bank statement program is just a huge program. We also allow them to use a W-2 co-borrower on this program. Again, giving them even more income and more buying power. So I kind of call it our hybrid loan, where we're doing bank statements for the self-employed borrower and W-2 income for the W-2 borrower. Again, more income, more buying power, larger loan size for everybody involved.
Thank you, Stacy. Great overview. Questions are coming in. And I didn't introduce the other subject matter expert panelists on this, Scott Grubel. Scott, Esther is asking a question. Can you use gift funds?
Yeah, hi everybody. Nice to meet everybody. I'm Scott Grubel, an account executive here in South Florida. Yeah, to answer Esther's question, we can absolutely use gift funds on the bank statement program. And really, in just about all of our programs for primary residences, we can use gift funds.
Great. Hey, Eric, another question in here. What's the minimum down payment?
Hi, folks. Eric Morganson. I'm out here on the West Coast. The minimum down payment is only 10% on a bank statement loan here at Angel Oak, and there is no mortgage insurance on any of our programs. We'll even go to 95% on a full doc, and we only use the primary borrower's FICO score, not the lower middle score of borrower co-borrower. So at Angel Oak, we have these programs that right now, potential home buyers are going to the money center banks like B of A, Wells Fargo, Chase, and are getting turned down, and they're convinced that they don't qualify for a loan. Please get with your mortgage broker or your favorite loan officer and identify these home buyers that are literally missing out because they do have the means to buy a house right now, but they don't know that they qualify.
How many people do you think on this call are thinking about their own home, Eric, right?
Well, our number one demographic for bank statement loans are real estate agents. Think
Absolutely.
about it. You folks out there, you're writing everything off. Your broker of record normally pays you directly into your personal checking account. With that said, we do a ton of loans for real estate agents.
Yeah, it's true. I mean, how many times have you done a presentation on behalf of one of your loan officers, and that loan officer gets a deal from a realtor? It happens every single time. Hey, Stacy, we had a question in here about interest only. Do we offer interest only on bank statement loans?
We do. We actually offer an interest only. It's a 40-year interest only. So the first 10 years is an interest only payment, and then we automatically convert it to a fully amortized 30-year fixed after the 10 years.
And just I know other questions here. This is being recorded. We will get this out to you by end of day tomorrow. And one of the, and we'll talk about that later, about one of the most powerful presentations we can do with you or someone on your team or to your entire office. We'll talk about that when we close. Scotty, talk a little bit about, we have someone in here about forbearance and how, because obviously some self-employed people, businesses, shut down for a little while. Talk on how we're treating that forbearance policy.
Yeah, great question. So for all of you guys that have any buyers or potential buyers that have had a forbearance, we do have solutions for them. And really, we're at the point now where a lot of the forbearances were taken back in 2020, usually early 2020, and the borrowers may have at that time taken advantage of the deferred payments and have since begun making payments. We have a number of different solutions. If they've begun making payments and they've been making payments for a year, it's almost as if the forbearance didn't happen for us. If they took a forbearance and it was just recently, as long as they've made 3 payments after coming out of the forbearance, pretty much all of the products and programs are available to them that we offer. So there's definitely solutions for anybody that had that situation, and then maybe they're selling their house and they're wanting to upgrade and buy a new one, or maybe they're just a buyer looking to buy another house for you.
Great, thank you, Scotty. So we're going to go on to our next program. We're going to talk about credit challenge borrowers. Eric, do you want to give this scenario? I kind of covered it earlier, but Eric, maybe just give a high level of scenario and kind of talk about the programs we have high level for these types of borrowers and why they shouldn't say no to these buyers.
I do. So in the lending world, in the agency business, you have to be seasoned from a foreclosure or a bankruptcy for 4 years. If you want to qualify for a jumbo loan, you have to be seasoned for 7 years after a foreclosure or a bankruptcy. And at Angel Oak, through our programs, we can do a loan for a borrower that had a Chapter 13 bankruptcy. We can do it 1 day out of discharge as long as they filed for bankruptcy 24 months ago. So on our programs, we can do jumbo financing 2 years out of bankruptcy, where everybody else says no to these borrowers. We're able to do home financing for them and get them into a house today, not have them wait until their bankruptcy has been seasoned. And when you're selling a house, you realtors, you make your commission the day that house sells, not having to wait 3 years until they're, 7 years seasoned on a bankruptcy. We're putting people in homes today on these programs that everybody else in the marketplace makes them wait.
Yeah, Eric, a great question coming in here, similar to the question on bank statements. What's the down payment on a program like this?
Well, now on a credit event or a bank statement, John, which one?
No, on a credit event. What's the minimal down for the full doc credit event borrower?
It can be as high as 90% LTV. And by the way, we allow gift funds.
There you go. I mean, that was Esther's question in the beginning, and as Scott mentioned it earlier, it's, we allow, other than non-owner occupied, but all of our deals, we will allow gift funds. And that's why working with subject matter experts like Stacy, Eric, and Scott, your loan officer that you may use, and as Stacy mentioned, if you're not working with a loan officer, I'll have my contact information out there at the end of this presentation. Please contact me directly. We'll get you in touch with the local loan officer or loan officer in your market that has access to these programs. So I love it. Anything else, Stacy, to add for the credit challenge, or Scott, anything else to add for that credit challenge borrower?
Yeah, it sounds like we have a lot of questions around down payment and gift funds. So I just kind of want to mention too, guys, we only season our funds for 30 days. So we can get the ball rolling, get the loan into underwriting. If somebody has mattress money or whatever, they need to put it in the bank now. We can still process the loan and underwrite the loan and get it going while those funds are getting seasoned in the bank. Again, we only require a 30-day statement. So let them get that seasoned in the bank for 30 days and let us work on the loan and get new to closing while they're getting seasoned.
Again, keep the questions coming. They're really good questions. And again, these our account executives are the most seasoned in the industry, and they know how to get deals closed. Scott, we're going to talk about our next program, which is, definitely has become a popular program. We talked about some statistics and how many people manage 2 or more properties. Scott, take us through this scenario and then give us some highlights of our investor program.
Yeah, definitely. I want to get into that program in detail because I think it's a program that for realtors, it adds a lot of value to your business because you're going to be able, as Eric said, to put more people into homes. But if I can kind of digress a little bit, the purpose of this presentation, and I really love sharing the information about our products and programs with the realtor community because I know that a lot of the realtor community may not be aware that these are available. And at the end of the day, all it's going to do, it's geared to do, is to give you more options to sell more homes, to help you put more buyers into more homes through different products and programs that maybe you didn't know were available to these buyers. And as Stacy went over with the bank statement program, I mean, you might look at a self-employed buyer and think, wow, this guy's only going to qualify, or girl, for a $500,000 house. And now we look at the bank statements and they can qualify for an $800,000 house. They might see a buyer that you took a look at the credit, or your broker that you work with looked at the credit and said, wow, this person just had a foreclosure a year ago. You might have thought you cannot sell that person a house. Well, guess what? Through these products and programs, you can. And so this program, I think, is going to be one of the most useful to you, and that's our investor cash flow program. It's also known as a debt service ratio program. I know just about all realtors work with a lot of investors, and investors have been limited in terms of the options they have when they're looking to build an investment portfolio and buy more properties. Conventionally, they're limited, and a lot of times they have to turn to doing hard money loans. This program is designed for those experienced investors and even your first-time investor. But the way it works is, it is literally a program where somebody purchasing an investment property can purchase that property with no income verification, no employment verification, and no ratios considered whatsoever. The whole program is based on how much rental income does the property generate. And we even have numerous options for that. If the property covers the proposed mortgage payment, great. The loan qualifies. The borrower can do up to 20% down, 80% LTV, only 20% down on an investment property purchase. If for whatever reason, the rent comes in a little light and it's not covering the proposed mortgage payment, we still have options to get that loan done for that borrower up to 20% down. And then if for whatever reason the rent is really low and our mortgage payment is much higher, they can put a little more money down and we don't even look at the debt service ratio. There's a lot of benefits here. You're talking single families, condos, townhouses, multi-unit properties, and it does not matter how many properties the investor owns. So if any of you are working with those really experienced investors that have big investment portfolio, like it says there, they could have 20 other properties. Does not affect us. We're only looking at the property that the investor is buying on our transaction. And as long as the rent covers that payment or it meets one of those qualifications I just mentioned, we can get the loan done for them with as little as 20% down. It's a great program. We use 100% of what the market rent is, not your 75 that you see on your standard conventional calculation. In terms of reserves and things like that, they only apply, again, to the subject property we're looking at. So as a realtor, hopefully some light bulbs went off, because I really think there's a lot of opportunity for you guys to go to your investors and say, hey, I have this program available that you may have wanted to buy some properties and we're running into log jams elsewhere with paperwork, whatever the case may be. You can use this program now to put them into those homes and take advantage of those opportunities. One last item I want to mention is that they can also do interest only on this program. So realtors know, for your investor clients, it's all about that cash flow on a monthly basis for them. So to be able to do 20% down on an investment property purchase with no income employment verification, no ratios, and be able to get an interest only payment on it so they can have that nice monthly income, it's a home run for investors.
Yeah, like Scott said,
I've got a quick question. Why are investors still using private money and not this program?
Yep. Just awareness. It's just, lack of
That's
awareness.
right. They don't know it exists.
Which is why I love sharing this information with the realtor community.
Yeah, so your borrower is not having to come with a stack of tax returns because if they're that seasoned investor. But guess what? We'll do this for the first time investor too. How cool is that? And Stacy, I know we always talk about purchase versus, and that's what realtors are concerned about. But tell them about one of your investors you recently got done and did cash outs.
Yeah, well, I had somebody that had a bunch of investment properties, all with private lenders. Their interest rate was through the roof. They wanted to do cash out. I did 10 DSCR programs for this borrower, cashed out on all 10 properties, got them out of the private mortgage, and the cash out that they were using, they were going to buy more investment properties. So it ended up helping the realtor community because I gave them more cash to go out and start looking for more investment properties. And guys, also close these in an LLC. You can put these investment properties in an LLC, and the LLC doesn't have to be seasoned any length of time. A lot of the investors out there want to protect their properties and put them in an LLC, which is fine. They can open the LLC today and close in that LLC tomorrow.
That's right. Great. Were you going to say something, Eric?
You guys, it's just awareness. Now, hard money is got around rates at around 9%. These programs are down into the 4s and 5s. Hard money stops at around 65% LTV. This no doc loan, we go to 80. Hard money is normally a 1 or 2 year balloon. Our programs are 30-year fixed with a 40-year IO option. And there are tens of thousands of investment properties out there being financed with hard money, where the poor the investor just doesn't know these programs exist. So if you have clients out there that have an appetite for investment property, we can even cash out of their current portfolio and give them enough money to go out and you guys sell them more investment property.
Yeah. It's a beautiful thing.
It might even be a good loan for you realtors out there listening to this.
Well, this is funny. So we just got, Scott, we just enhanced this program to include a borrower that maybe can't get done. Talk a little bit about that foreign national borrower.
Yeah, it's a new wrinkle we added to the debt service ratio program. Foreign national buyers, as we all know, you realtors included, because you're selling them these houses. A lot of times for a foreign national buyer, they have a difficult time being able to verify a lot of the documentation that's required with your conventional foreign national loan, or your standard foreign national loan, I should say, whether it's the income from their country or credit from their country or proof of owning some sort of property in their country. There's a lot of different things that different lenders require on what I like to call a quote unquote full doc foreign national loan. So what we have done is we have allowed foreign national buyers to take advantage of this program. And it's exactly the same for them. There's no employment verification, income verification, there's no ratios. As a matter of fact, on a foreign national, there's not even any credit looked at. As long as a foreign national puts 30% down and the rent for the property they're buying covers that mortgage payment, that's all they need to qualify. It's literally that simple. It's a true no doc loan for a foreign national buyer.
Yeah, and you're probably seeing a lot of, foreign, that foreign national wanting to move their money to this real estate market, as hot as it is, they're looking to put some investments here in the U.S. So we've got that program for them. And as everyone here said, it's just true awareness, making you guys aware of the programs that are out there so we can help you move more properties. The Mortgage Bankers Association is saying that next year, purchase market is going to increase by 9%. So hopefully we can help you capture your fair share of that business. Eric, let's a lot more questions coming in. So let's move on to our asset qualifier person. Eric, give us some highlights of the scenario.
We have an asset depletion and an asset qualifying program. Asset depletion is a full doc loan, but the debt to income ratio is a little bit too high. So we can subsidize their income by doing a schedule of their assets. Asset qualifier is for somebody that is not really ATR compliant. Now, this is, I need to let everybody know, you real estate agents, you may not or may be aware of the ability to repay. The ATR regulation is alive and kicking in this non-agency playground, because every borrower has a 3-year statute of limitation to bring a lawsuit against their lender on their primary property loan for their inability to repay. So I could get into a loan with Angel Oak and 2 years later call an attorney and go, I don't feel like making my payments. I'm going to sue that mortgage company because I don't feel I have the ability to repay my loan. They have a 3-year statute of limitation. So that's where we've got to be very conscious that these loans are ATR compliant. Well, for somebody that doesn't have any income, how can we document they have the ability to repay? What we do is we pivot to their assets, and we have a depletion schedule that if they have $1 million in assets, and it can't be in jewelry, it can't be in real estate, it can't be in exotic cars, it has to be in a 401k retirement program, savings account, things like that. What we can do, if they have $1 million in assets and they want a $500,000 loan, that's an asset qualifier. All you do is just go through your favorite mortgage broker or loan officer, have them get in touch with an Angel Oak representative, and we will walk you through that calculation.
Yeah, hey, another question that came in here, and I think it definitely bears, sharing with the audience. Stacy, delayed financing. How's that affecting us all today? Can't hear you, Stacy.
Sorry, I heard my going off, so I quickly muted myself so y'all didn't have to listen to my husband printing stuff for his job. Forgot it was muted.
New work environment.
Yeah, work from home. So delayed financing is definitely the talk of the town right now with backup offers. You guys all know what's going on with the backup offers. People are just like, if they don't pay cash, they might lose the home. So that is definitely something, if you're working with a buyer and he's like, well, I just don't want to lose the home, I'll just pay cash, but I really don't want to use all my cash. They can do delayed financing with us. They can close, pay cash today, and turn around and recoup that cash with us tomorrow. So we'll use the purchase price that they use to pay the house, and we'll go up to the max LTV as if treating it as if it was a purchase. We're not even going to hit them as a cash out refi, which is phenomenal for them. So it's definitely something that I know a lot of buyers are concerned with, losing a home and paying cash, but rest assured they can turn around and recoup their cash with us.
Yeah, that's really big these days, Stacy. So they're not missing out on the house of their dreams. They just, moving a few assets around, and they're getting that asset back, shortly down the road. So great point there. I know we're coming up close to time. Let's, Eric, can you kind of share where you can find some of these borrowers? You're great at teaching people how to do this.
Just literally getting the word out. We have all sorts of, we can do co-branded marketing for you and your favorite broker to get the word out. But it's just literally getting the word out that these programs exist. I want to point out on a bank statement loan, what we're going to do for your client. So if I'm I have a real estate license, never sold a house. I'm one of those people. But here, you've all probably had a self-employed client be approved from some bank. You're showing them maybe 5, maybe 13 homes. Now it's time to write up a contract. They go back to the bank and the loan blows up because they had a company that has all this write-off, or for whatever reason that self-employed borrower, that loan didn't go through. With Angel Oak, what we're going to do for you and your client through your broker is we're going to give you a full credit and income underwrite right up front within 24 to 48 hours, and letting you know exactly what your potential home buyer qualifies, exactly what their purchasing power is. Folks, that is extremely strong. If I were a real estate agent, I would be doing backflips going, wait a minute, you're going to tell me right up front within 24 to 48 hours how much of a house they can buy, and they're self-employed but going bank statements. That's very powerful, folks.
Eric, help our audience today. Give them some highlights here. What's on the screen as far as where we can find these type of borrowers or buyers, right? So I know we use borrowers and buyers kind of interchange here, but show them some way or tell them about some ways that you've recently helped people find these type of buyers.
Well, anytime you have a license for anything, that's public data. And we're all across the country right now, but wherever you're sitting, contractors are printing money right now. Virtually, they're printing money. Home construction, home remodeling, anything to do with construction, boy, it is a complete touchdown. Well, that contractor has a license. Well, what an easy database that is to get to literally mail out to contractors, asking them, boy, do you want to buy a house? Feel you don't qualify, because what are they doing? They're taking advantage of our 70,000 page tax code and writing everything off and probably told they don't qualify. That's just a very simple one. Doing seminars, and we could have an Angel Oak account executive co-present with you at seminars for first-time home buyers. We don't care if they're a first-time home buyer doing a bank statement loan. We will co-market with you. Just contact your broker, have them contact Angel Oak, and together, let's get the word out.
Yeah, so and also, we have people in the audience. You might know a bankruptcy attorney or a divorce attorney. Usually when stuff like that happens, again, Eric, you've used this word a lot, awareness. We're making you aware of the ability to provide financing for a home purchase for some of these borrowers. So if you know a bankruptcy attorney or a divorce attorney, usually stuff happens to people during that time, and it could be a bad credit event. You could still get that borrower or that buyer in that house. So those are just examples to increase your sphere of influence here. So I don't know, Stacy, if you've got anything, or Scott, to add.
If I could add to that, yeah. So I have seen in a lot of the realtor presentations I've done, I've seen a lot of the realtors that left have a lot of success by just going right after the low-lying fruit, revisiting any of their turn downs, any buyers that they might have spoken with in the last year or 2 years, going back to their investors that might have already purchased properties through them. Like Stacy said, maybe they can use this program, the debt service ratio, to refi, pull cash out, and buy more, add to their portfolio. So I think that's going to be one of the easiest ways. Go back to your self-employed buyers that maybe they decided not to buy because they thought, they through their taxes, they could only afford a $600,000 house, and they were really looking for $1 million house. There's your buyer that maybe you saw, wow, this guy had a foreclosure and I told him he couldn't buy a house. Now you can. So I think I've seen a lot of realtors have success there. Social media, guys, you can literally, we have marketing materials that you can literally copy and paste, and you have access to these marketing materials through your favorite loan officer, mortgage broker that is approved with Angel Oak. If you don't have one that's approved with Angel Oak, we'd be more than happy to set you up with one. But through our approved brokers, there is literally social media marketing that you can copy paste to all of your social media sources, where you're going right to the public and saying, hey, have you had a credit event? Are you looking to buy an investment property but can't verify any of your income? Are you a self-employed borrower that doesn't claim much income on their tax returns? You can now buy a house. I think those are really two really good ways for realtors to get this information out there and attract some buyers.
I love it. I love it.
Also, too, I'd like to add on the builder. Most builders have in-house financial advisors, or I'm sorry, in-house mortgage brokers right on site. They don't do these type loans. So take your loan officer or mortgage broker with you. If you're going to go show a house that is a new build and the builders are there and they can't get the financing done, that's also going to help your mortgage broker to maybe get in their foot in the door and become a preferred mortgage broker outside of their in-house, because again, their in-house mortgage brokers only doing your FHA and conventional loans. So the builders is a great opportunity to get these types of loans done for.
Yeah, you might see financial planners on here and say, well, what about them? Well, Eric mentioned it. We talked about it on bank statements, only 10% down. where your conventional will require 20% down. So that financial planner's benefit is that they keep those assets with that financial planner, or even, as Eric mentioned, we do a 5% down for full doc. So those are, again, these are just ideas for you to take going forward and increase your business for the rest of this year and into 2022. So don't tell your self-employed borrower not to claim deductions. These are kind of what not to do things. Don't tell them to adjust their tax returns. We could get a loan for them. Don't tell your investor they own too many properties, right? Or don't tell them that, hey, you're just out of luck. You have no more cash. Do what Stacy said. Cash out some of those other investment properties that have appreciated over this great run we've been on, and go buy more investment properties. Don't turn away buyers who suffered from that financial harm during COVID, or maybe had to do forbearance, or anything that might not let them qualify for a conventional loan. Reach out. Don't automatically turn away these borrowers. Just these buyers and borrowers are going to get done. They contact us every day, so don't turn them away. Go to your favorite loan officer, and if you don't have one, get in touch with us. We'll definitely put you in touch with one of, like Stacy said, someone who knows how to work these programs for you and on your behalf. Instead, again, call us first. What do you want to get when you call me? Access to all these programs, either your loan officer or the one we put you in touch with. And Eric just told us about, we will pre-qualify that borrower up front. We will calculate that bank statement income before they even go shopping with you. Support through the entire loan process from the great account executives we have here. They'll own that relationship with that loan officer. They will set the proper expectations that we know how important you are to that loan officer, and we cherish that referral source just as much as anyone else in this process. And then team, we have the best dedicated team. This is all they do. So I think some of the questions you might want to ask your loan officer are, hey, is that all they focus on? Is that all they do is non-QM, or do they do agency with non-QM? Because our underwriters, that's all they do. They underwrite just non-QM. They don't dabble in agency. They don't do agency all the time and then dabble in the non-QM, non-agency space. That's all they do. That's why working with Angel Oak, the leader in the non-QM, is why you should continue to push your loan officers to work with us. So again, my name is John Gemini. Here's my contact information. I hope if you're not working with a loan officer today that has access to Angel Oak Mortgage Solutions, reach out. I'll put you in touch with them. Here's my email address. Scott, Stacy, Eric, any last parting words?
I would just say, if you're driving around with somebody,
hold on, Eric. Time out, Eric. Stacy, go first, please.
I would just say, if you're ever driving around or on the phone with a client and you're not sure you can get it done, you've never heard their situation before, not familiar with it, reach out to your loan officer or mortgage broker and have them run it by us. It could be something that we can get done and get them into a home for you for.
Exactly. We love scenarios. Let's say the credit hasn't been run yet, or hey, can we bounce this off you? Bring it on. We love scenarios that could potentially mean you guys selling more homes.
And last, Scotty.
Yeah, sorry, I lost a little connection there, but I would say reach out, guys, to your favorite loan officer, mortgage broker. As I mentioned earlier, they're probably approved with us. If they're not, we can get you set up with somebody that is, and you can have full access to all of these products and programs. You can always reach out to us if you need a little more information and education on any of them. We'll be happy to share it. It's all about getting the awareness out to the realtor community, because it all starts with you guys. Without you guys selling those houses, there are no loans coming through the door.
Well said. So thank you, everyone. This is going to be recorded. We will get this out to you before end of day tomorrow, and my contact information is here. Feel free to reach out. We really appreciate you taking the time out of your really busy schedule, and hope that you close out the rest of the year in great fashion. So thank you, everyone.